Hey everybody, today I'm going to cover a typical aging schedule that you would see in the chapter in an introductory financial accounting courses that deals with the bad debt expense. So an aging schedule can look a little more daunting to students just because it has more information in it, but it really isn't. So it's a little more in depth than like a percent of sales method because all you're doing is multiplying one number, but as long as you can multiply across and add up a column, you'll do just fine in this type of problem. So I'm just going to illustrate it to you using Excel. So if you'd like to use Excel for this type of problem, it makes everything really simple. So I'm going to cover this problem and then do the corresponding journal entries. So the textbook that I use in my courses is the Corporate Financial Accounting Textbook, 16th edition by Warren. It is published by Cengage. So if you have a different textbook, you're going to want to consult with your professors to make sure this type of video would be relevant to you. But most likely it's going to be very similar, if not exactly the same, as the textbook you're using. So the journal entry titles can just change a little bit, but for the most part, the concepts are going to be the same. All right, so let's go ahead and get into the problem. It says Meyer Company is a wholesaler of dog collars. An aging of the company's accounts receivable on December 31st and a historical analysis of the percentage of uncollectible accounts in each age category are as follows. So they've already broken up the types of accounts and the percent of uncollectible. So what that means is they're analyzing their accounts receivable. You can hear my dog in the background right now. He just woke up. So they're analyzing their accounts receivable to determine the amount that is going to be uncollectible. It's something they typically do at the beginning of the year to set aside some money, or not set aside some money, but set aside part of their accounts receivable that they have determined that is going to be uncollectible based off of past data. So obviously, this isn't going to be an exact number, so your allowance for doubtful accounts isn't going to be exactly the amount that you're not going to collect every year, but it's usually pretty accurate based off of your past data. So they've said anything that is not past due, only about 0.5% is typically uncollectible. However, when we get to accounts that get over 180 days past due, 70% of those accounts typically become uncollectible. So this type of method for a company is more accurate in analyzing their accounts receivable to determine the amount that will be uncollectible for the upcoming year. You just want to make sure that the amount of accounts receivable you're showing on your balance sheet is the most accurate amount as you can guess, so it's a guesstimate is what we say, because it's not going to be 100% accurate, but it tends to be pretty accurate if it's based off of past data, which is what this company has done here. So they've analyzed their total accounts receivable balance of $1,037,500, and they've broken it down to the amount that is past due or not. So you can see these different categories here. So I went over here and put it in an aging schedule already so that it's easy to multiply across. So in part A, they want us to estimate the proper balance of the allowance for doubtful accounts, what it should be as of December 31st. And then in part B, assume that the allowance for doubtful accounts for Meyer Company already has a credit balance of $10,000 before adjustment. So if you remember right, the allowance for doubtful accounts is a contra asset account. So any sort of contra account behaves in the opposite way of whatever it's describing. So a contra asset behaves in the opposite way of an asset. So if a debit increases an asset, a credit will increase a contra asset. So it behaves in the opposite way. So if it has a credit balance already of $10,000, we already have $10,000 in there that didn't get utilized from last year. So we're going to want to make an adjustment for that. So I'll get to that when we do the journal entries. So journalize the adjusting entry for the uncollectible account as of December 31st. If an amount does not require an entry, leave it blank. So let's go ahead and get the proper balance of the allowance for doubtful accounts. So as of the end of the year. So what we want to do is we want to take each category and multiply it by the percent that is deemed to be uncollectible. So in the not past due category, we have a balance of $836,000. So go ahead and take that balance and multiply it by the percent, 1/2%. If you're doing this in decimal form, it's 0.005. So I have it in percent form, which is 1/2%. So Of this $836,000 balance in the not past due, we're estimating that about $4,180 of that will be uncollectible. So if you do this in Excel, you can just drag down because it'll pull the formula across. So it's the 92,000 times 4% gives you 3680. If you do this as a decimal, 4% is 0.04. 31 to 60 days past due is the 41,800 multiplied by 8% that we're deeming to be uncollectible gives you the 3344, and so on and so forth until you get to the over 180 days past due. It has a balance of 15,900. 70% of that is deemed to be uncollectible. So multiply those two numbers out, and we're expecting we're not going to collect $11,130 of the accounts that are over 180 days past due. So to get your correct balance in the allowance for doubtful accounts, all you want to do is add up the total of this column. So again, if you're doing this in Excel, it's easy to just do a simple sum. You can do the sum key up here if you have that available. And a total balance in our allowance for doubtful accounts should be $35,662 as of the end of the year. Right now, we already have a credit balance of $10,000, so we need to make an adjusting journal entry to adjust the balance in our allowance for doubtful accounts so that it's correct going into next year. So what I want to do is do that adjusting journal entry now. After you get your aging schedule complete, you know your balance should be $35,662. It's sitting at $10,000, so you need to make an adjustment for the difference between those two. So you're going to debit your bad debt expense. I don't want to capitalize that if I didn't capitalize debt. So bad debt expense, and it'll be the difference between the balance it needs to be and the balance it is already, which is $10,000. So that's $25,662. Because once I make this adjusting journal entry, the balance will now be the correct amount of $35,662. So your bad debt expense went up by $25,662. You need to make a corresponding entry to a credit to your allowance for doubtful accounts. So I'm going to indent this and do allowance for doubtful accounts. Oops. My terrible typing, for $25,662. So that when I go ahead and post this to my ledger, you'll see that there's already a $10,000 credit balance in there. And once I add an additional $25,662, it'll be that correct balance of $35,662 in that account now. Okay, so that covers the aging schedule. Again, you'll typically see this in the chapter in an introductory financial accounting course that covers bad debt expenses. This is just one of the methods that is taught in that chapter. It's one of the more daunting methods, which is why I decided to take a video and cover that. If you'd like to see any other videos, comment below. You can subscribe to the channel to get the latest videos and any changes that happen to GAP. I will post new videos so that you can get the most up-to-date videos available for any of your accounting courses. I will be adding more videos as I go along. So that if you continue to progress through your accounting career as you're studying to be an accountant, or just you need some refresher courses, you'll get the latest up-to-date videos. So that's it for today. So happy accounting.